No,
red recording in the corner.
it was doing recording AI, but not now the Zoom is okay.
Oh,
So yeah, I'm just gonna I'm gonna record this so that anybody that can't watch it today can show up later. But when we go to upload this recording, we'll also share the templates because I have some spreadsheets for y'all to use for support. Because the thing about almost every, I mean, I don't know where this isn't the case. When it comes to any kind of tax strategy, you always have to have support for the strategy for the deduction, whatever it is. So one of the things I try to get drilled into people's brain is that the deduction is in the documentation. And so making sure that you have support for anything at the end of the day, because people think that their credit card statements for their expenses for their businesses are support for the things that they pay for, and that's not actually true. You're supposed to actually maintain the receipt for those things, and so that you can actually see what it's for in a lot of cases. And so, you're not going to get audited every year. How deep are they going to go? But the thing is, when it comes to things like this, you do want to make sure. So just to kind of give like some history on the Augusta Rule, this is something that was birthed out of the Masters that was happening in Augusta, Georgia every year. And what was happening is that the Masters tournament would go on. Well, all these people in that area were renting out their houses because there's this influx of people going to that area for this Masters tournament every year. And they were renting out their homes and they were earning this income. And they didn't think that it was fair for them to have to report this income that was earned over such a short period of time, because it's not like they were in a legitimate business or anything. They were just taking advantage of a need that really presented itself at that time. And so in 1976, they actually passed IRS law where people could take advantage of what they called the Augusta Rule. And I think it's section 280A of the Internal Revenue Code. Not that you all will ever need to know that, but just FYI. So what this allowed people to do is that this Masters tournament would happen for 2 weeks out of the year. And so people were renting out their homes. And so what it allows them to do is rent out their home for 14 days or less per year. And they didn't have to claim that rental income on their taxes. And they just needed to be able to support the deduction. And so like I said, you still have to be able to support that and the reason behind it. But what a lot of business owners started doing is they started using that concept, and really anybody can use this concept. You don't have to be a business owner necessarily. It can be anybody. And one of the things that I want to clarify is that the Augusta Rule is not the home office deduction. Those are two separate things. And so you can actually use both of these. However, I would caution against that. And I'll tell you, and I'll go over that in a moment. So, what we recommend with a lot of people is how this brings more value to your life as a business owner and for just business strategy. And when I go back to the intention piece, is that what we'll do is rent out your home to your business. So, most business owners, I don't want to say most, a lot of business owners are operating their business in a separate location than their home. And so this makes it really simple to be able to leverage this, because they're going to go to their house and they're going to hold their monthly board meetings at their house, and they're going to rent out their home to their business. And they're using their home as a place to conduct business meetings and develop and refine their business strategy. So that's what I was talking about. This is really a business strategy move and a tax move. Now, what you do to take advantage of this deduction is your business is pretty much going to pay you personally for the business use of your home. Now, a lot of the question that a lot of people have is, how much can I pay myself for that rent? Now, you can't just go and pay yourself $2,000 and deduct it as a business expense if that's not a fair market value rate. And so anybody that knows, we're all adults here, we're all familiar with real estate and what is a fair market value. So you want to make sure that that rental rate is a fair market value that would be reasonable for renting that out. And so what you do is if you're planning out your life, one of the things that I do at the last quarter of the year is I will get an annual calendar and I will plan out the next 12 months. Like, when am I going to be gone? What dates am I going to do business planning with my husband? What dates are we going to review our finances and things like that? And this goes on there, is when are we going to be doing our business planning? When are we talking about those things together? And we'll put it on there. And I would encourage other people to do the same thing so that it just makes sense. And I'm actually going to share my screen so that you can kind of see some of the support for this. Oh, that's not the right thing. Let's see. The Zoom has updated and the buttons look different, so it messes me up. Share.
Updates always throw me for a loop.
I know. Well, we use Teams and we use Zoom, and so it's like all different.
Mhm.
So yeah, I mean, you can rent out your home to your business and say you're going to host your monthly board meetings at your home. Now, I did say that you could rent out your home for 14 days or less per year and not have to claim that as rental income, but it can be a deduction for your business. And so generally people are only doing this once per month, but if you're squeezing something else in there, maybe you do like 2-day annual planning and you're using your home as the hub for that. Then you can definitely squeeze the full 14 days in there. And so one of the things on here is, and we created these templates for support. I have another one. Oh, this Augusta. So I have a checklist on here that makes this very simple for you to be able to implement. So one of the first things that people ask questions about is what is the fair market rental value? So the easiest way that I have found to do this is to simply go to Airbnb, go to Verbo or something like that, and find a home that is comparable to yours and look at what that's renting out for on a daily basis and use that as your basis for what your rental rate is going to be. And so we're here in Kentucky, which is going to look way different than California or Minnesota or Texas, especially in bigger cities and things like that. But here in Kentucky, for a home of my size and to rent it for one day would be about $250 probably. But if I was like in a bigger city, then it would be about 400. So I'm going to use, for instance, about 250 for mine, which I checked that about 6 months ago. It's probably changed since then. And so that's going to be my basis for that. And so what I have done is I actually saved like not a screenshot. Yeah, it was a screenshot of this home that had comparable value. That's just my basis. That way, if something ever happened and I was audited, like I took it off of something like this is a legit fair market value. Because and I've heard other people use a methodology. This is the most common one that people will use, and it's pretty solid. And so that's what we'll base that rate off of. So in August, because we haven't done our monthly meeting yet. So in August, my husband will rent our home from his business will rent our home to have the business meeting at the end of this month. And he's essentially going to distribute or pay himself personally that rental rate to substantiate that deduction in his business. And so the other critical piece of this is that you can't just transfer that money. You need to have documentation for it. So what does the documentation look like? You can have the receipt, but what you want to have is a rental agreement as well. And I think that I actually have a template for a sample rental agreement. Super simple. You can just plug and play the information that pertains to you. Really easy to use. You'll put like the name of the business, your name, and then the rental amount. And I think you put in there how many days you're going to use it per year, and just update this contract on an annual basis. And use that rental agreement for your support. Like, just like if you were renting a brick and mortar from somebody else, you have a lease agreement that supports the amount that you paid them every month, right? So you're going to do the same thing for yourself personally. And one of the things this makes me think about is that I know as business owners, we look at our business and we have bred and raised this business from its infancy. And sometimes it's hard for us mentally to separate ourselves from our business. But one of the things to think about is that, okay, you got to treat your business as if you were working for somebody else and this was their business. So, for instance, like if I look at Courtney, she works for my company. And so if I'm renting out if she's renting out her home to me and we're using that for planning for my business, and I'm going to pay her rent to use her home for an annual planning meeting or a quarterly planning session, I'm going to pay her money and we're going to use a rental agreement. because she is a separate entity from my business. And a lot of people don't think about that when it's their own business, because it's just theirs, and stuff, it gets really blurry on like, what do I document? How do I do this? And so like when it comes to Nicole, for instance, like you are an employee. When you have a business that is a partnership or an S corporation, you got to think of yourself as an employee of the business. Like you wouldn't pay somebody money for something that you couldn't substantiate paying them for. And so you got to treat yourself and the transactions between you and your business the same way. And so hopefully just to kind of separate that thing, and when you're able to like make that distinction that you are an employee of your business, then it makes understanding that, especially when it comes to tax strategy and compliance around having an S corporation, you're on payroll, you're renting out your home, you get a W-2, like you are an employee of your business even though you own it. And so just making that distinction. So once you have that rental agreement in place, you know what the fair market value is. That's where this template on here for you to be intentional about the scheduling of your meetings and using your home for this. Go ahead and put these dates on there. If you don't know these dates in advance, just each time you do this, put the date on there. What was the purpose of the business use of the home? How long did it last? Who attended? And the notes. And one of the things that a lot of people don't know about S corporations is that actually to be in compliance, if you were to be audited, the IRS can actually ask you for your board meeting minutes. You're supposed to keep those on an annual basis. And that's something that a lot of people don't know about having an S corporation. It rarely ever comes up. And few people actually do this properly, but you're actually supposed to have board meetings as part of having an S corporation. And so that's a lot of what this helps to implement in there as well, because when you have board meetings, you're keeping meeting minutes, you're making notes of who attended, what was the purpose of it, what did we take out of the meeting. Like if you're going to do this, the mistake that a lot of people will make is they will just say that they're going to do this, they'll pay themselves, but they don't actually do it. They don't have any support, they don't have any intentionality behind it. And then if something was to ever come up and they ever got audited, then they don't actually have support. Or if they did say that we met here, but it's like, well, what'd you meet for? And they don't document that, then the IRS can actually refute that and disallow that deduction, essentially. And you don't want that. But again, this just goes back into how this is also a business strategy because it's intentional. We have monthly meetings with a lot of clients. Some people we have weekly meetings with. We always leave there with action items. We're clear on what our initiatives are, what we're working on, and what we're going to do to make progress toward that goal, right? The same thing should be happening when you're implementing the use of this, not just as a tax strategy. So that's what this template is for. And you can modify this and do whatever you want with it. This is just something to make this a little bit simpler for y'all. And I think the rest of it's pretty self-explanatory. Now, it is important, like your accountant is not going to keep track of this for you. And so if you, if you have you're going through your business, you're renting out your home, that should be reported on your financials. Like we should see that rent expense on your business financials. We're just going to deduct that. Now, if we see that there's rent expense that is going to you, one of the things that we do is that we have the expectation that you understand for tax purposes, you need to have a system in place for maintaining documentation for your expenses, both business and personal ones that can be used for tax purposes. If you're itemizing deductions on your taxes, you have support for that, right? So you are ultimately responsible for that. So you need to make sure you're keeping this support. So with clients that, if we're looking at their taxes and they have paid themselves rent throughout the year, then we need to make sure that they have the support, but I'm not going to ask them for this information. If they tell me yes, then I'm going to assume that they're being honest. And then if they don't have it, then they need to accumulate that, or we have to disallow that deduction from their business, essentially. And so that's pretty much that in a nutshell. Like I said, this is a very simple thing to use. Where you might use the Augusta rule in combination with the home office deduction. So for instance, I work out of my home now. I did have a physical office, but we moved back to where I'm working out of my home now. So I'm not going to use the Augusta rule for my business anymore at this point. I could up until I had my own office, because that line was drawn where it's like I had a physical office, but when it came to having business meetings with my husband, I could use my home for that. I'm not going to blur that line anymore and just take that risk. So now I can use the home office deduction for the latter part of the year, for instance, on taxes. But if this is you, a lot of people might have like a vacation home, for instance. Maybe they're working out of their home. I would not encourage use of the Augusta rule if you're working out of your home and also trying to do this, unless you can have a very separate and distinct area where you are working out of this office and using that as a home office deduction, but you use a completely separate area of your home to take advantage of this Augusta rule. You can do that, but you want to be able to very clearly draw that line. And so for that reason, a lot of people aren't able to do that, or they don't want to go through that, or they don't want to take that chance. And so if they have a second home, which a lot of people will have like a second vacation home or something, then we'll use the Augusta rule for their vacation home, and we can absolutely substantiate that. So you can take use of both of those things on your taxes to save a lot of money. But you just want to be very clear, like, would this hold up in court, essentially? And this is where, like, I hate tax code because it's not like business. It doesn't have to make sense. Like, taxes change depending on what underwear they're wearing that day. And it's so annoying. And so we just have to understand the rules that they have established when it comes to that. So what I would say with that is that, can you uphold this deduction with integrity? And I've never had anybody that I can think of that has taken this and knowingly like didn't have support for it. But people do that all the time. So don't think that they don't. But just having that line drawn and being able to take advantage of both of those. And one of the ways I want to show you all too, because I run up, can you all see my calculator on here? One of the things that I think a lot of people that don't really understand taxes and deductions and tax credits is that they don't understand how certain things will save them in taxes. And this comes to mind because I remember a guy back like a few months ago, and he had like $30,000 in assets that he could depreciate. Well, he thought that was going to save him $30,000 in taxes, and that is not how that works. So actually how this works is, so if we're looking at this Augusta rule, and say you rent out your home to yourself for 12 days out of the year, once a month, and it's $400 a day. And so you do that for 12 months. Now, that's going to be $4,800 in rent expense that your business is going to show that it paid you, that you, on the opposite side of that, do not have to show as income personally. And so, but that doesn't mean you're going to save $4,800 in taxes. What is the next important thing to understand is, what is your effective tax rate? Now, a lot of people don't know this. I don't know that I necessarily expect you to, but I do expect people to understand what is the value of this tax strategy to my overall tax expense. So I will just say, like, as a very general, as a generalization, 15 to 20% federal tax rate is where a lot of our clients are landing. If they have real estate, then you can definitely make that lower. But as a business owner, where most of your income is earned, a lot of them are sitting around 15 to 20% effective tax rate. But so the thing to understand, you'll be in a marginal tax bracket, and it might be in the 24.5% tax bracket, but your effective tax rate is more important, because that is what we will base your tax savings off of. So if I have a client that is going to implement this strategy 2025, they're going to use this all throughout the year, they're going to pay themselves $400 a month out of their business, so they're going to have that $4,800 expense. It's going to save them, oh, I cleared that out. If their effective tax rate is 20%, then it's going to save them about $960 in federal income taxes. That is how much it's going to save you in taxes. So being aware of that when it comes to anything that you spend money on that will have a tax benefit. And I put this example in the Telegram chat, I think yesterday. For example, if you buy an $80,000 vehicle, it doesn't save you $80,000 in taxes, assuming we don't have 100% bonus depreciation right now, but say we were back in 2022 and we could 100% the bonus depreciate that. If your effective tax rate is 20%, it saves you $16,000 in taxes. It doesn't save you $80,000 in taxes. So just making that mental calculation, like for every dollar you spend in your business, it's saving you approximately 20 cents in income taxes, for instance. So just something to think about there when you're calculating, like, how is this actually going to benefit me? And the reason I tell you all this is that there is a lot of people out there that I think prey on business owners that don't understand how taxes work, and they want to charge them these really excessive advising fees, which everybody's programmer is different. I don't claim to understand that, but I have seen where this has been predatory on people, where they'll charge $20,000 a year, not just the first year, but $20,000 a year for tax strategy, but you're not actually saving that much in taxes. And so I want people to understand, when you spend money and there is a tax benefit to doing so, or even when you're earning money, like, how much is that going to cost you in income taxes, or how much is it going to save you effectively, and understanding how all that stuff works together. So hopefully that makes sense. I will make sure that we get those templates uploaded for you all, so that you have that, and then just this recording if you need to go back to anything. But I also wanted to make sure, if anybody has any questions on that, how to use that for yourself, or because I know that I can just go straight over people's heads sometimes.
Can I ask you a question?
Yeah.
Okay, so we obviously have our brick and mortar business, but Jay works from home. And so we had talked about implementing the Augusta Rule, but would it not make sense to, if Jay is working from home essentially full time from like a home office that is also like half guest bedroom, but also office?
So those things, like, could he work from your brick and mortar?
Yes, technically right this second, but when we hire our next doctor, no. Like, he will lose his office. And so his work is all virtually done. So we're trying to maximize our space in our brick and mortar for people that need to come in physically to our space, versus all of his coaching is done virtually. So he could work from anywhere, but he works from home.
Yeah. Well, again, that goes back to, like, if he has he's going to get the home office deduction, which is going to provide a tax benefit. And so he needs to have a dedicated space to that. But again, if you all are intentional about this and you're scheduling your meetings, say you have like your living area and you're going to do business planning in there, and that's going to be the space that you're going to use because you work from the brick and mortar and you can substantiate that, I would say that you all are in the clear. Just making sure you have that support in there, because when it comes to doing like the home office deduction, he's only going to get credit for that office space, not the entire house.
Correct.
Yeah.
Okay. Thanks.
You're welcome. Yeah, so I mean, it's little things like that. Another thing that I'm gonna do a training on and record that to put that in Progress University here in the next couple of weeks is hiring your kiddos, which, you're not gonna hire an infant, but some people do. Some of these babies that are like born into these like movie star.
So we have like a lot of big pediatric presence in our practice, and so like, could I technically hire him for like social media? Like, I'm taking a video of adjusting him and things of that nature that's then going on social media.
Yeah, you can. Now, it's funny because I actually saw somebody in a group that I was in yesterday talking about this. I mean, if you can support it, then absolutely, because people do it. Like, there's babies that are born into these celebrity families. They're making money from the minute they pop out.
I'm not trying to be a celebrity family, but if I can pay him.
No, but just to substantiate. Yeah.
Yeah.
Again, going back to the deductions and the documentation, and just being very critical about that. And the thing about setting kids up to be on payroll, it is a little bit of a different process, and the setup is the thing that takes the most time, but maintaining it after that, like, is so simple.
Okay.
So yeah, you can, I mean, you could pay your kids up to, you can pay your kids up to the standard deduction and federally, they will not have to file taxes. They will not have taxes to pay. Now, it will be important to know if the standard deduction is $5,000 in the state that you live in, and you pay them $6,000, they will have to file a state income tax return, for instance. Now, baby's probably not going to make $14,000 a year. But what a lot of people will do, and what I certainly recommend, now I will preface this, there are a couple of scenarios where you might hear me recommend using retirement accounts. And this is one of them, is especially leveraging that Roth IRA, because that money's going to grow tax-free. That is like one of the like no-brainer investments that you can make for yourself and for your kiddos. The other thing might be like a self-directed IRA, which is a conversation for another day, but that's pretty much the only time you're going to hear me recommend retirement. But that's what a lot of people do: hire their kids, open up a Roth retirement account for their kids, put as much of that money in there as they can, maybe let them have some of it, but not, you don't give them most of that money. And then all that money is just growing tax-free.
Cool.
So, but there's a few steps in there that I want to clearly lay out and just give people the templates and things like that to be able to implement this seamless. It's very simple. You just want to make sure you cross all your T's and dot all your I's. So I'm going to be making a training on that for people so that you all can do that. Really easy to do.
So question for you, Brittany, then. So the money has to, if you were to hire, let's say I hired my 2 boys, and I were to pay them, it goes into their account. So they would have their respective accounts, and then they would be paid, I assume, like via payroll. Is that how that would work? Or would it be a different type of?
Yeah. So this is like the little intricacy where you want to set this up this way. So you don't want to pay them directly out of your business, because then you'll have to pay payroll taxes on them, Social Security and
Right.
Medicare,
Yeah.
and you don't want to do that.
Right.
And they don't need to. And so what you do is you set up a family management entity, not an LLC. A lot of people like
Okay.
go start an LLC for this family management. Don't do that. You can just set up a sole proprietorship, get an EIN for it, and establish a bank account. You transfer that money out of your business and into this family management company bank account, and then you will disperse it from there to their respective accounts themselves. And so what you do is you avoid the additional expense for self-employment or for the payroll taxes, but you still get to deduct that as an expense from your business because they're working in your business. So that's how you set that up. And then from there, so I mean, they'll have to have their own bank accounts, which I mean, you'll want them to anyways. So yeah, it's just setting that up like that to do that.
But ultimately that money, it has to go to them. Like it goes into this family account, then it has to go into their respective accounts. That family account can't be dispersed any way you want on the back end, or can it? Do you see what I'm saying?
No, you don't. I mean, and maybe if I understood, like, is there a scenario where you're thinking like you would transfer it to that family management company and then transfer it somewhere else that's not their accounts?
Yes.
Yeah, I mean, I would want to make sure, because you want to, like, you'll pretty much establish an agreement for your kids to work for you and document the stuff they're doing. So you want to be able to show effectively that money went to them, whether it went to a checking account or a Roth account.
Got it. Okay. No, and that's totally fine. I know that sounds very dubious what I'm saying here. Like before, it's like some offshore account in the Caymans. I don't mean it like that. I was, I'm just, if there was like other, if there was like accounts I would hold on behalf of them, as opposed to going directly to the accounts they have access to. So it's just, so it could be, okay.
Yeah. As long as it is something that's like, this is clearly for this kiddo.
Got it.
Like if it's a 529 account, if it's a Roth IRA, if it's a checking account, like it is in the care of
got it,
that kid's name. Yeah.
Okay. As long as it's in care. Perfect. Okay. Thank you.
Yes. Yeah. You should be good there. So we'll get the support for all that set up. Because the thing is like, I've explained this to a lot of people, but I'm a visual person. I need to see how things work. And so I need pictures. I am like 5 years old. So that's why I put that support. I like to make support for things and just make it plug and play and just get the setup done and take advantage of it. Because the thing is, like, this is one of the easiest things that you can do to save money on taxes for yourself and then to help your kids build wealth. Same thing with the Augusta Rule. And same thing with any tax strategies, really. It's just knowing like how it works. And a lot of the times it's really simple. if somebody tries to confuse you to get your money, then you should be very skeptical.
Yeah.
Courtney, did you have anything to add to that? Courtney's like, Courtney's husband has his own business, so she's probably over here like learning some stuff.
Yeah, well, there are a couple like specifics that I actually took note of because we have planned for ourselves to do planning after his AEP finishes
Yeah.
in November, and then as well as we've been talking about how to structure having the girls. One of the things we do is we send out a lot of letters and mailers to his current clients just to keep in touch with them. And we've talked about, okay, let's have them put the stamps on everything and we'll pay them to do that, you know, and stuff like
Yeah.
that. So yeah, this
Well,
is
that
all.
just makes you more effective as a business owner. Like the
Mhm.
less of those little things that you have to do, teach you how to delegate and lead more effectively, which
Well,
I
and
mean,
it's
having
usually
kids in and of
me
itself is already a thing.
doing it.
Yeah, exactly. Well, and you all have your office out in a separate building, so you all could definitely leverage that Augusta Rule because your house and the office are separate.
Mm-hmm.
So
Yeah.
it's really easy.
Yeah.
Yeah.
One thing I was thinking about too, and I think we had talked about this a little bit before, just you and I, but that with, so kind of going to paying your kids out of your business and what that money is eventually used for. But that another option outside of doing like an investment account or something for them, that the money in the checking account could be used towards like, you know, paying for their school supplies or paying for, you know, different things for them that you're already paying for, but now it's, you know, that money is just being transferred to you in a more tax advantageous way.
Absolutely. Yeah. Make them pay their way, man. I don't know why kids act like they gotta be given everything until they're 18. I saw somebody where like this woman had yesterday she was gonna start charging her kid that was 18 years old $50 a month for rent.
Oh, I
I
love
don't
it.
see no problem with that. I mean,
Well,
it's not that
and
much, but it's the principle.
mhm. Our girls, so we started trying to figure out whether we want to do an allowance or anything, but what I started telling them, like, hey, if you're not doing your chores, you're gonna pay me to do your chores because I'm not doing it for free.
Oh,
So
I like that.
they're
I'm an anti-allowance person. I think to each his own. Everybody has their own reasoning, but one of the things that I told our kids is that I'm not going to pay you to do things that you're already going to have to do as an adult.
mhm.
Like I'm not gonna because what I felt like would happen, and I think I've seen this happen is that kids get compensated for this when they're kids. Then they grow up and they get into the real world and they're living by themselves, and you can't go into their apartment without being blown away by the smell because they didn't want to clean unless they were getting paid for it. And I'm just not gonna I'm not gonna like condition our kids like that. So it just didn't make sense to me. Plus, I didn't grow up and get any allowance. If I went above and beyond, we would sometimes, but no,
Yeah.
I'm not doing that. They don't do the job good enough for me. If I'm gonna pay somebody to clean my house, I'm gonna pay somebody that's really good at cleaning my house. I'm not gonna pay my kid. They
Yeah,
need to learn how to do
I have to redo it myself with my girls.
Yeah, well, they're young. They're like super young. What's the oldest one? Like 6, 7?
Yeah, she'll turn 7 in October.
Yeah. So you got, yeah.
Yeah.
I can't imagine what Tammy has 2 boys. So based on your comment the other day, like praising that they got a shower, I thought that was so funny. Like I laughed out. I was sitting upstairs in the kitchen and I read that message and I laughed out loud. It was so funny.
Yes, the 13-year-old, yes, it is to get them to do it on their own without you having to, you know, usher them into the bathroom and turning his shower on yourself. The fact that he did his own initiative, I was extremely impressed, and it was a very proud moment for me.
I don't remember dealing with that, but I've heard several people deal now. It's not that they wouldn't no, never mind. They would take baths at our house, but when they went over to their mom's house, like it was questionable.
Yeah.
They always had to come back and almost immediately take showers the day they came back home. So,
Yes.
no, that rings true now that I think about it.
Well, in the 13-year, when you start getting to that age, you're going through puberty, you start like you do start to smell. And so I think that he is a little bit aware of that part too. So I think that even though he doesn't generally care about his appearance overall, he's not vain or anything like that. I do think there is, someone made fun of, if someone were to make fun of him because of his smell at school, he's trying to mitigate that. 8th grade, middle school is hard enough. Don't add that. Don't level or layer that on. That would not be.
I do remember getting them to wear deodorant was a farce.
Yeah,
I remember that.
Yes. He actually carries a deodorant in his backpack because he is very conscious of that. So at least, yeah, from that. Whereas I have some friends who have girls and I love them, but they're so stinky. Does anyone say anything? We're like, oh my God.
It is a learning curve. I don't remember being that hard to implement that stuff, but for some people it is certainly a learning curve. People don't like change. It is true. People do not like change.
No, I totally agree. Totally agree. So, and if I could go every day without wearing makeup and spending any time doing that, I would. I can't, but I would.
Oh my gosh. Yeah, I'm working on getting there. That's why we have all these med spa clients and I get my skincare from them. I definitely wear a lot less than I used to, so that's great.
Yeah.
But yeah, that's definitely a goal. All right, awesome. Well, do y'all, so I think we're good on questions. We'll get this recording uploaded once it's ready to go, and then the templates with that, and then share that with y'all so that you can download that and use it for yourselves. And then just let us know if we can help with any part of that.
All right, that sounds great. Well, thank you, Brittany. That was great.
You're welcome.
Very helpful.
I'll talk to you later.
Okay, talk to you later. Okay, bye, everybody.
Bye, y'all.
Bye.